Okay students, now here is a question on preparing a statement of change in working capital. Okay, a statement of change in working capital show whether the working capital has increased or decreased when we compare the current assets and current liabilities of two different years. So remember the formula for finding working capital, the concept of working capital we are taking here is working capital is equal to current asset minus current liability. To do this, the very basic thing you should have is the ability to understand among the given items in the balance sheet, among the given assets and liabilities in the balance sheet, which all belong to the category current asset and which all belong to the category current liability. If you can identify this, everything else is easy. Okay. Now just see the question. Here we have a balance sheet of information about 2 years. Okay. Now let's see each item. The very first item, the name itself says it is fixed asset. Remember, current assets are assets that belong that pertains in the business for a very short time, that have a huge liquidity and can be easily converted into cash. So fixed asset, the name itself denotes that it remains fixed in the business for a long time. So we are bloody sure that it is not current asset. Now think about investment. Investments are usually made for a long period. Unless and until investment is stated as a short-term investment, we can't take it as a current asset. So this also doesn't belong to the term current asset. And the next one is work in progress. We know work in progress means the work is going to be finished and the finished good is soon going to be sold. So work in progress has a short life in the business and thus it qualifies as a current asset. And stock also, when the business has a stock, we expect the stock to be turned into sales within 1 year or as soon as possible. Okay, so the stock of the business is usually considered as a current asset. Bills receivable also has the same concept. We have an expectation that the bills receivable will be easily converted into cash. Okay, it will be converted into cash soon, so we assume it to be part of our current assets. Finally, we have cash. We needn't doubt about that. Cash is the most liquid asset every business can have. So cash is absolutely a current asset. Thus we have found which all belong to current asset. That means everything below this line remains it is current assets. We have done the first part. Now we are going to move to the next part, that is finding the current liability. Once again, we can look at each and every item. Okay. The very first item is equity capital. We know capital is the basis for the business. It is the basic investment made by the owner in a business, so it often remains in the business for a long time. So we needn't doubt equity capital is not current asset, it is a non-current asset. Then what about debentures? Debentures are usually, very often debentures are long-term debentures. They have a unending redemption life. That means it can be redeemed at the end of the business alone, or there are even debentures that can be easily redeemed, but they will have a long life. So we often take it as a non-current item and it is not a current liability. Now the tax payable. Tax payable means it is to be paid in the next year itself, within the coming financial year itself. So we needn't doubt that it is a part of it is a part of current liability. Now moving into the next one, accounts payable. Remember, accounts payable is a sum of bills payable and creditors. Okay, if in the asset side it is written accounts receivable, it means that it is a sum of bills receivable and debtors. So in this question we have just accounts payable. Accounts payable is sum of bills payable and creditors. Since both of them are liquid and easily converted into cash, accounts payable remains to the current liability category. Similarly, interest payable, dividend payable, everything belongs to current liabilities. That means that current liabilities is everything below this line, except equity capital and debentures. Everything else belongs to current liability. Here below this line we have everything as current assets. Now we have found what all the current asset, what all the current liabilities. Now it is easy for us to prepare a statement of changes in working capital, a statement showing changes in working capital, or a schedule of changes in working capital. I will just show you what you have to do. These are the headings you should write: particulars, the 2 years, increase or decrease. We can give a heading, a statement showing changes in working capital. Above here you can write as change, because increase and decrease are change that happen to the current assets and current liabilities. Initially you have to give an heading here, current asset, and you should list down each current asset here. Okay, for example we have what, okay, yeah, the very first current asset is work in progress. So give an heading current asset, write work in progress, write the amount for 2010, it is 80,000, to 2011 it is 90,000. Similarly we have stock, bills, receivable and cash. Write down each item, write the amount, take the difference. In 2000, when we compare 2011 to 2010, there happened an increase of 10,000. So below the column increase, write 10,000. In the next item, what happened? Okay, every item is increasing. So if it is an increase, write the amount in increase column. If the difference is a decrease, write the amount in decrease column. Similarly, write everything and what? Take the sum. Okay, you should take the sum of current asset. Now we have written every current asset. We have to take the sum. Take the total of current assets. Then you have to write current liability, and also we have to take the total of current liabilities. Similarly, at the end, after writing current assets and current liability, we can find working capital. How? Remember, working capital is equal to current assets minus current liability. Just think, the total of current asset is taken as total A, total of current liability is taken as total B. Then the working capital will be total of A minus total of B. This is how we prepare a schedule, a statement showing changes in working capital. Remember, we will get two values for working capital, because why? We have total for current assets in 2010 and 2011. We have total of current liabilities in 2010 and 2011. So we will get two values for working capital. There also we should see whether it happened an increase or decrease. That also we have to mark here. By that we can find what? We can find whether an increase or decrease happened in the current working capital. It is important for us to know whether the working capital increase or decrease to prepare fund flow statement. In this question we are just asked to find what statement of changes in working capital, but remember, this is part of preparing fund flow statement. We will move on to that, but now just understand this. So please try to do it yourself. If you feel any difficulty, please let me know. Okay, thank you.